We said that Fed meeting back in late July here, a meeting that didn't necessarily surprise Katie Greifeld in terms of expectations. But of course, there was a lot of drama behind the scenes. We know that based on some of the public comments that have been made by some of those FOMC members since.
Absolutely. A lot of unanimity among the officials on the voting front, but behind the scenes, it'll be interesting to take that look.
Minutes of those meetings now set to cross the Bloomberg wire at any minute. Let's get right to Kailey Leinz down in Washington with the latest. Kailey.
Well, Romaine, the minutes do show that despite the unanimous decision to hike rates by a quarter point in July, there was division among participants. The minutes say almost all participants judged it appropriate to raise the target range for Fed funds to 5.25% to 5.5%. But a, quote, couple of participants indicated that they favored leaving the rate unchanged, or they could have supported such a proposal. Now, importantly, as for the path forward, there is a signal in these minutes that the Fed is not done raising rates. The minutes say, quote, most participants continue to see significant upside risks to inflation, which could require further tightening of monetary policy. Now, participants observed that inflation still remained well above the 2% target and that they would need to see more data on inflation and further signs that aggregate supply and demand were moving into better balance to be confident that inflation pressures were abating. And in discussing the monetary and economic outlook, participants noted uncertainty remained elevated, agreed that policy decisions at future meetings should depend on the totality of incoming information and its implication for the balance of risks. The minutes note a, quote, number of participants judged that with the stance of monetary policy in restrictive territory, risks to the achievement of the committee's goals has become more two-sided. Now, Chairman Powell already told us in the news conference back in July that the Fed staff has abandoned their view that a recession is coming by the end of this year. The minutes do show this and note staff observed indicators of spending and real activity had come in stronger than anticipated. The staff, though, does continue to expect real GDP growth in 2024 and 2025 would run below their estimate of potential output growth, leading to a small increase in the unemployment rate relative to its current level.